Hello again, traders, and welcome everyone. This is Ankit from Currencies, and Happy New Year to all of you. It's good to see you all again. This is our market recap for Monday, January the 3rd. So let's get in back in the routine. Take a look at the markets as the volatility returning to the market. So this is where it's time to get excited. It's time to really pay close attention to the bigger movements that are taking place in the markets. There's definitely volatility in the markets today, but what you're looking for is a bit more consistency. So let's see if we can find a good opportunity in the next 24 to 48 hours. So let's do a quick market analysis and see where things ended. So market started off with a negative note. Notice that the equity markets were down 0.42%. So overall, the markets were down, but again, it was a really mixed picture because we had bigger stocks like Apple or Tesla. They were falling apart. Overall, markets were okay. So this is again a start of the year where the money start to move around, and this is where it's a bit early to call what the market's going to do. We can kind of take a look at the markets and the direction and see where we are. And so far, as you can see, that we are in a downtrend. Nothing has changed. We are kind of stuck in this little sideways range for the past few days. So we're still trying to figure out which way market wants to go. I think as we take a look at the overall the targets, we are kind of halfway between the October lows to the highs over here. So this way, at this point, markets can go anywhere. And as a trader, we need to be prepared for both case scenario, keeping in mind that we could still be in a downtrend and just have a couple of up weeks. I won't be surprised if we get a little bit more push to the upside and then kind of roll over once again, but we have to kind of wait for confirmation for that. If we take a look at the outlook overall, again, the World Stock Index kind of in the same boat. We are just sitting in this little sideways range and trying to figure out which way market wants to go. Crypto, on the other hand, seems like doing the same thing. Very hard to get excited about something that is just not going anywhere. We need direction, and for direction plays, we need to see higher highs and higher lows. So if we take a look at the markets overall today, we had the dollar and the yen was outperforming. Oil had a big move down. Energy sector was actually down most, and gold is actually up today as well. So I still not convinced about these moves. I think we still need some follow through, or as we develop the movements this week, I think we'll have a better clarity which way things wants to go. So overall, we are still looking at a -2 on the markets. We are below the 20 and the 50, the moving average. And we always talk about it. That's not a good sign if you're looking for to buy the markets. So overall, things are still on the downside here. As we take a look at the schedule, again, we has been holidays for the past few days, and holiday market environment. So I think things are likely to pick up as we get some new events tomorrow. We have the Swiss franc CPI. I'm always paying close attention to any CPI figures because that's really what's really in focus for all the central banks. So we'll be paying attention to it overnight, especially if you're looking for Swiss franc crosses. Pay attention to that. This comes out about 2:30 a.m. Eastern Standard Time. Again, not expecting a big move unless we get a bit of surprise, one way or the other. Either a surprise to the upside or a surprise to the downside. Now, we have some the data that's coming out from for the U.S. dollar. I think it will have a bigger impact on the markets and the U.S. dollar. The manufacturing PMI, and most importantly, the JOLTS job opening numbers. And later on tomorrow, we have the FOMC meeting minutes. So you can see that things are busy tomorrow. But on Friday, it really is where we are kind of paying close attention to with the U.S. and Canada's job support. So that's really where we can actually find good, decent opportunities off the news event. So far, let's take a look at the currency analysis and see how things move percentage-wise and where we need to pay attention to. It's very important to know what's moving. So if you take a look at the crypto markets here, you can see that the Litecoin was really the best performer at 6.02%. But again, if you're looking at Ethereum, Bitcoin, they're not really moving as much. So again, not really convincing for me to jump into the crypto markets. Now, looking at the currency market, I mean, look at the start of the week or start of the year for the yen and the dollar. So yen actually been rallying into the holiday. So I think in the last few days, yen has been strong. So we're just getting a continuation with the yen. On the other hand, dollar has been pretty weak. So dollar got a nice little lift today. So we have to really take a look at dollar crosses and see if we see any sort of follow through off this move. And since these two currencies were taking the lead, I mean, every currency was kind of on the downside here. Swiss franc, euro, Aussie, and the Kiwi. The CAD was kind of really in the middle. It had a lot of movement. I mean, a lot of volatility, but still didn't really establish a good candlestick to really buy into. I mean, every rally I think is on CAD has been more disappointing, and the British pounds you can see were kind of flat as well. So while we look at this move again, good percentage moves, and now the question is about the follow through. So if you take a look at the velocity scores, I like the fact that we have velocity score is getting better on this the yen and the dollar. CAD, I'm not really convinced what's going to happen with the CAD, but let's take a look at what happened with other currencies. I'm still, like I said, I'm still keeping the powder dry, like waiting for the moves. We're seeing the outperformers could start to underperform, just like the Kiwi. It started to underperform a little bit as it really outperformed in the past couple of months. I mean, since October, Kiwi has done well. So we could see some sort of rotation where the outperformers start to underperform and the underperformers start to outperform. So let's take a look at charts and take a look at some possible trades ahead and see what we can find when we take a look at these currency baskets. So let's just start with the dollar. I'm actually going to take a look at where we are in the grand scheme of things and kind of narrow the time frame down. So notice that the dollar has been pretty weak, and so far it's just in a sideways range. So even though if we get a 4-hour chart, you can see that the 4-hour chart was really getting us to the top end of the range. But the good thing is that it was actually held on to most of the profits for today. So at this point, I mean, it looks like dollar wants to extend higher. But as you take a look at the longer term charts, you notice that it needs to clear out this overhead resistance to really start to get rally going again. So far, as you can see in the past, we have had some sort of rallies, but they didn't really catch any traction. So pay attention to the dollar. I think dollar could be at this cross point where it could accelerate more to the downside, or this could be just another great buying opportunity for the dollar to go higher. I think we really have to establish where the market's going to go. And the markets are just not clear right now of where they want to go. I mean, if you take a look at the chart, a 4-hour chart here, you can see the market's just going sideways for the most part in the past few weeks. So one way or the other, once we establish what the risk on or risk off theme is, I think that will be easier to make a call on the dollar and the yen. You can see the yen has been moving very nicely, but in between, it has its pullbacks. So I think these pullbacks are just buying opportunity. I think at this point, I'm not really looking to short the yen as much, but then I think the longer the yen, the long is the better play here. So whenever we get these pullbacks, that's again a good time to just kind of sit back, let the pullback happen. And once the pullback is finished, then it's time to jump back in. You can see that exact same idea here. It took some days to pull back, but then that was just a good buying opportunity. So this is pulling back a little bit here, but I think those pullbacks needs to be shallow. They needs to hold certain levels, and then that will be again an opportunity to buy into. There are other currencies that I'm kind of iffy about, like the Swiss franc. You can see this is one of the currencies that I'm paying attention to this year because it has done really well. But I wouldn't be surprised if this turned out to be the weaker currency in the first quarter. So I mean, if it gives up this moving average here, this is the weekly chart, I think we can see some further downside in the Swiss franc. That's I think one of the currencies that are just kind of holding and not really doing much. But again, as a trader, our job is to make sure we follow what's moving. The euro is actually doing a very similar thing. Again, if you take a look at euro has been mostly up. But again, this is a difficult trade. You know, it does well for a couple of days, but then it just doesn't have a follow through. So not really looking for the Swiss franc or the euro at this point. And again, British pound, you can see it's been pretty weak. So it just finding it a little bit more support here. So maybe it could rally a little bit. But remember, if we are in this bear rally, it's better to have this rally a little bit that we can short later on. So you got to know where you are in the cycle and when to enter. If the cycle looks extended, maybe it needs to have a little bit of rally to jump back into. So take a look at CAD. I mean, again, look at the cycle here. This thing has been pretty weak for the most part. Every rally's been sold. I mean, look at the candlestick today. I mean, if I go on a shorter term chart, I mean, you'll see the price action was really all over the place. Overnight, we had a very nice price action. CAD was the strongest currency. And then this morning happened, and you can see the complete reversal of that move. And then we got a back and forth. So there's a lot of back and forth. This is just showing its volatility. So it's overall still in a downtrend. Be very cautious. I think we need to see a better closing candles to really see a bit of more follow through. The candlestick today was not not exciting. So I think at this point, still sideways. Very cautious on the CAD here because the price action is just not really what you want to see, especially if you think this wants to reverse. Now, Aussie and Kiwi. As you can see that the Aussie has been rallying in the past couple of weeks, and that got hit today. So I think at this point, if the dollars get stronger, I think that's bearish for both the Aussie and the Kiwi. And as you can see, the Aussie and the Kiwi here. Kiwi has been one of the best currencies since October. As you can see, that's a 10% move overall. If you look at from the bottom to the top, that's almost a 10% move. So at this point, it's pulling back here. In between, of course, it's not really as aggressive onto the downside, but wait for these rallies to short into. Right now, it's kind of stuck in between this 20 to 52 moving average. But if you think the direction is more to the downside, then instead of trying to play it both sides, just wait for that price action to finish or those bear rally to finish to kind of jump back into. And for our chart again, it's just showing that in the shorter term, maybe it wants to rally a little bit. So it's okay if it wants to rally. Like I said, just give us a better entry later on. So if we take a look at these technical setups again, it's really difficult to establish a trend because things are just not going anywhere. Look at Aussie dollar. Even though it was down 1.5%, I mean, this is a wider range. That's the one thing you'll notice, that there's some wider range. This is about a 2.89% range. So again, a decent range to play with, but this is not directional. So you should really have these directional strategies that you're trading with. Just realize this is not showing a direction. So maybe you just have to go in, look for a trade for a day, and that's it. You'll be done with it. You're not looking for a trade to ride out a trend that could last you for a few days. This is not the price action that you want to see for that. So same thing, dollar CAD is another one that I'm paying close attention to. And notice that a lot of choppiness, but it's just sitting at this high here. If you can get above this 137, I think you can aim for 138 or 139. But I think for that, I need to see the dollar continue to kind of go higher or break up that little downward range that is stuck in. So a lot of the movements that are happening, again, look at dollar yen. This has been a great currency pair, especially in the past few days. Again, look at the movement that we got in this month of December. So, of course, whenever you see this big outsized move, and we look at from this top to bottom here, that's like 3.6% move to the bottom side. So it's just in a bear rally mode. So in a bear rally mode, like I said, you wanted to let it ride, let it go higher a little bit, and then jump back in when it really hits some key technical standpoint. So I think at this point, dollar yen still looks weak, but in the shorter term, it just trying to rally a bit here. Again, an hourly chart is showing you that it's just rallying a little bit here. So again, right now, I like short-term charts because I don't like to hold any trade because it's not really an environment where we can decide, okay, which way things wants to break out, because breakout could happen either way. So until then, keep the powder dry. I think this is going to be a great year. You have to really be patient and let the trade come to you. Again, that's the key here. So as the market outlook remains uncertain, we still have volatility that's returning to the markets. So we need to kind of play that volatility. Find the movers, look at what's moving, and then don't get stuck in trades that are not moving, and have a good proper position sizing. This is, again, slow start of the year. Again, I think tomorrow, Thursday, and even Friday with jobs report, we'll probably see a better price action across the board. So pay attention, keep a close eye on the overall markets, and trade on the right side of the markets. Thanks everyone for joining. Have a great rest of the evening. We'll see you in the next update. Cheers.